Hey everyone, welcome back to our latest TDR Cannabis in 5. I'm your host, Shad Dales. In today's latest episode, we're going to dive into a big story late last week that's shaping the cannabis industry over Thanksgiving weekend involving Tilray and this stock plunge. And trust me, this isn't just about a cousin walk-in hangover after turkey dinner. This is about optics, substance, and really the kind of moves that make investors either lean in or run for the hills. So let's talk about what happened in the news last week and what this means for Tilray and for investors in the company moving forward here in our latest TDR Cannabis in 5. Let's get into it. Okay, here's what happened last week. Tilray, the Canadian cannabis company that's also been scooping up beer and liquor brands, they announced late last week on Wednesday after the market closed that it would execute its pre-announced 1-for-10 reverse stock split. The timing here this week. And as you can imagine, investors didn't exactly pop the champagne. By Friday morning of last week, Tilray stock was down nearly 20%. So let's look into this. Now, reverse splits are one of those things that sound neat in a press release, aligning shares outstanding with companies of similar size, making it more attractive to institutions, and that's the key here. But let's be real, reverse splits are rarely bullish signals. They're usually defensive moves, and Tilray's case is no exception here in this case. So what's the real reason behind all this? What goes unsaid in the PR is the elephant in the room, the Nasdaq listing requirements. So the exchange requires companies to keep their share price above $1, which many of you know. Tilray has been flirting with that danger zone, even receiving a warning earlier this year. With shares trading around 81 cents at the time of this announcement, the reverse split is less about optics and more about maintaining viability. So if you think about that for a second, from nearly $150 a share back in 2018, right after Canada legalized cannabis federally, to now under $1 today. That's not just a decline, that is a collapse in an investor confidence. But let's not jump to conclusions because there's a bigger picture here involved in all this. When we look at it, Tilray's CEO, Irwin Simon, he tried to reinsure investors, saying the share price doesn't reflect the intrinsic value of the business and that the move will help the stock's trading dynamics. He later added that Tilray's foundation, it still remains strong, and it is. Now, I'll give him credit for keeping the messaging upbeat, but investors right now, they're not buying it, literally. The stock has fallen nearly 45% since earlier this year on January the 1st. So that's not the kind of foundation most shareholders want to stand on right now. So there's lots more to dig in here, but first a quick word from our sponsor, Morgan & Morgan. There's a reason smart investors celebrate when their portfolio jumps 40% in a year, just like there's a reason Morgan & Morgan is America's largest injury law firm. Think about it. When you're investing, you want the right team in your corner. The same is true if you're injured in dealing with an insurance company, and that is where Morgan & Morgan comes into the equation. Why? Well, they've got more than 1,000 attorneys and over 100 offices nationwide, and they've been fighting for people for over 35 years, and their track record is hard to ignore. Case in point, in Florida, a client was offered $350,000, but walked away with $12 million. So in total, Morgan & Morgan, they've recovered more than $25 billion for over 500,000 clients. Because if you're injured due to someone else's negligence, you deserve to be paid. Not all law firms are created equal, but with Morgan & Morgan, their fee is free unless they win. You can start your claim right now by clicking the link in the description below or by scanning this QR code on your screen with your phone. At the end of the day, if you want what you deserve, make sure you go in with the right team by contacting Morgan & Morgan today. All right, so as we look more into this, why does this all matter right now? Well, as we know, the cannabis sector has long courted deep-pocketed institutional investors, but those investors have mostly stayed on the sidelines. Why? Well, because the regulatory environment in the US is still a mess, and that's putting it mildly. Cannabis, as we know, is legal in nearly half the states, but it's still federally illicit. Institutions, they don't want risk capital until they see clarity. So yes, many of you believe it's the Nasdaq dollar threshold, but this is more about keeping institutionals' interest because institutions aren't going to buy a stock below $5. That's just the way they operate. So don't kid yourself. Less about the dollar threshold and more about institutions, because Tilray's reverse split, it is an attempt to keep the door open for those institutions. With this move, they're saying, hey, we're still here, we're still viable, and we're ready for you when reform indeed comes. Yes, reform, I say that. So really, what's at play here when it comes to Tilray? Well, their strategy, it hasn't just been about cannabis. They've scooped up beer and liquor brands like Shock Top and Sweetwater Brewing. Why? Well, because they want to have access access to the American consumer market in some form, even if they can't serve cannabis south of the border, because all eyes are on this U.S. market. So it's a diversification play here. They're hedging against the uncertainty of U.S. cannabis reform by still building a footprint in beverages. But also, here's the catch. Investors bought Tilray for cannabis exposure, not for craft beer. So while diversification might stabilize revenue, it doesn't necessarily excite the cannabis-focused investor base right now. So let's go back to institutional positioning here, because here is the strategic angle. Institutions won't enter after a stock falls below a certain level. Again, I said the $5 threshold. Tilray knows that. The reverse split isn't just about optics, it's about positioning. They're trying to remain relevant long enough to attract those big players, especially if reform is indeed announced in 2026. And yes, I know, some of you listening are rolling your eyes right now, thinking, here we go again, flirting with cannabis reform, and with many believing that it's not going to happen under the Trump administration. And let's face it, Tilray stock is down a lot since this 1-for-10 split. There's a lot of angry investors out there, and I get it, but the company is playing the long game, keeping itself in the conversation for when, not if, reform actually comes. So don't get too caught up on what's been happening over these last couple of days. But let's also be careful here. Reverse splits, they don't fix fundamentals. They don't magically create demand, and they don't increase debt or regulatory hurdles. What they do is buy time, and Tilray is navigating the market to stay listed, to keep institutions interested, and to keep the narrative alive. So for retail investors, the lesson here is simple. Don't confuse optics with outcomes here. A reverse split might look like a reset, but the substance is still the same. Tilray needs reform, they need growth, and they need investor confidence to indeed return. So to wrap all this up, Tilray's plunge over Thanksgiving, it isn't just about one company, it's the snapshot of the entire cannabis sector right now. As we saw sky-high valuations in 2018 to bargain bin prices today, the industry is waiting for clarity. Institutions are waiting, retail investors are frustrated, and companies like Tilray, they are indeed working to endure long enough to see the next wave of reform. That is the key in all this, everyone. So whether you're bullish or bearish or just tired of hearing about reverse splits, you have to remember this. The optics might change, but the substance is what really matters here. And right now, the substance is that cannabis reform remains the ultimate catalyst. And that is indeed the case. So this has been our latest TDR Cannabis in 5. As usual, I'm your host, Shad Dales, breaking down the optics versus substance in the cannabis sector so you don't get lost in the hype. Thanks for checking in, and don't forget to like, subscribe, and smash on that bell for all notifications, and leave your comments below. What did you think of this news? But what do you think about Tilray moving forward? That's what I want to hear about. Does this bode well for the company and institutional interest in the long term? Let me know by leaving your comments below. That's it for now, everybody. Thanks for checking in. I'll see you in the next video, and thanks again for logging on here to the latest TDR Cannabis in 5.